Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we would be discussing about what to expect in Nifty, Bank Nifty from here on. Key levels to watch out for both the indices. We'll also be discussing on key sectors and stocks that we should be focusing on for the day, where we are witnessing aggressive rollover positions to the next series. It was yet another day of considerable down move in frontline indices with Nifty closing 0.83% lower, while Bank Nifty closed 0.74% in the negative. Also, Nifty Midcap ended the session 0.7% lower with a poor market breadth. With the dollar index sustaining above levels of 106 levels, with the US 10-year bond yield once again inching towards 4.9, we need to be a bit careful with over leveraged positions. On the flip side, the positive thing for us is Brent crude prices in the last 2 days have stabilized around $88 per barrel, providing some relief for the rupee. We feel that these macroeconomic pointers should be closely tracked in the next coming few days. This would be the main key catalyst for the market momentum going ahead. Having a look at the market breadth, most noteworthy if we see among the constituents of the Nifty index, 84% stocks are trading below its 20-day EMA level, while 68% stocks are trading below its 50-day EMA level. This clearly indicates market breadth has weakened significantly over the course of the last few trading sessions. These evidences show that the market is completely under the bear grip at the current juncture, and unless we sustain above the levels of 19,500, any rally can be considered as a pullback rally itself. Also, the volatility has increased in the market in the past few sessions. It's important to track India VIX and the implied volatility of the options. The implied volatility of Nifty at the money strikes for October series is around 13.7, which is the highest in the last couple of trading sessions. The volatility index India VIX has marked a low of 8.82 on Monday, and thereafter it has surged sharply by around 28%. However, it is still trading in a narrow range if we consider its historical volatility. Any sustainable move above the level of 13 would lead to a sharp uptick in India VIX, which could mean further pressure on the downside for Nifty. With the result season in full swing, the most influential stocks whose earnings are due today are ACC, Asian Paints, Canara Bank, PNB, Dixon, and Westlife. Hence, we may see some action in PSU Bank Index post the result announcement in the above mentioned PSU Bank stocks. Coming to index levels, the benchmark index Nifty has tumbled below its 100-day EMA level for the first time after April 2023. Along with this, the index has slipped below its prior swing low of 19,223, which was formed on August 31st. This confirms the formation of the first lower top and lower bottom on the daily scale. As the major indicators, RSI has not yet reached an oversold condition. We may be in for a bit more pressure in the next 4 sessions. On Wednesday, Nifty futures has ended below the level of 19,150 mark with a loss of 0.73%. The cumulative OI for the current next FAR series has surged by over 4%, which indicates overall short build up at the current juncture. Further, Nifty October series rollover currently stands at 62.96%. For the October monthly series open interest wise put call, PCR is at 0.56, which indicates overall flat to bearish bias for the current monthly expiry. Post the fall in the previous trading session, index for the day could witness resistance around 19,210, 19,230 levels, and till these levels are not crossed, Nifty could retest a crucial support zone around 19,030, 19,000 levels on the downside. Any sustainable move below 19,000 on the downside would attract selling pressure up to 18,850, 18,800 levels at the current juncture. Sustaining above 19,230, a short covering move up to 19,300 could be witnessed. Looking at the OI data from a monthly series, significant put OI has been built at 19,100, 19,000 strikes, while on the call front 19,200, 19,300 witnessed considerable open interest addition. Also unwinding in 19,200, 19,250, 19,300 puts is indicating that bulls are losing their confidence post this range breakdown below 19,250. Overall range for the day could be 19,000 on the downside and 19,270 on the upside. Coming to Bank Nifty has closed at its 6-month low and ended below 43,000 mark, below its long-term moving average, that is its 200-day EMA level, for the first time after the last week of March 2023. The cumulative OI for the current next FAR series has dipped by nearly 2%, which indicates overall long unwinding. Going forward, the key resistance would be 43,100, 43,200, and the time 43,200 is not crossed, index could test 42,400, 42,450 zone, which is the 50% Fibonacci retracement of the up move from 38,600, which was seen in March 2023, all the way towards 46,300, which was seen in September 2023. Any move below 42,400 would lead to further selling pressure in Bank Nifty up to 42,100, 42,000 zone. Now from a reversible perspective, the first level that we should watch out for is the 200 DMA level of 43,200. Index should close above this level for at least 2 sessions, and only then we could expect any short covering up to 43,450, 43,600. On the sectorial front, all the stocks from power telecom space have either witnessed short build-up or long unwinding. Further, almost 80% stocks from oil and gas space, pharma, chemical, realty and infrastructure space have either witnessed short build-up or long unwinding. This indicates overall bearish sentiment in the above mentioned sectors, while on the other hand 80% stocks from metal space have either witnessed long build-up or short covering. Among the FNO stocks, persistent Balkrishna Industries have seen significant long build-up, while on the flip side, Bharat Forge, Manappuram Finance, Adani Enterprises, Tata Communication, Chola Finance, Indian Hotels have seen significant short build-up. If we observe the FI data, FI is sold to the tune of 4,200 crores. Well, actually, it's just one big institution, while the DI is bought to the tune of 3,500 crores in the cash market. FI's long short ratio for index futures remains steady at 26% as they added over 1,800 short index future positions. In stock futures side, FIs have bought to the tune of 27,600 contracts, while on the options front, FIs bought over 1,76,000 contracts, more than doubling their existing long call positions, and even bought 2 lakh contracts of put, which indicates increase in volatility is what they are expecting. Just to summarize, the key level for Nifty being 19,030, 19,000 levels, and resistance is seen at 19,210, 19,230. While for Bank Nifty, key support would be 42,500, 42,440 levels, and resistance would be seen around 43,050, 43,180 on the upside. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market details and upsides. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.